Hey, Beyond Stocks community. I'm super excited to join you this beautiful Thursday morning. I've got my friend and awesome partner is Keith Blackborg. Super excited to share with you. This guy provides a lot of value to people like yourselves who are interested in growing your business, leveling up your life financially and health and mentally, and then also provides a wealth of value from a tax standpoint as well. So you're a man of many skills and abilities, Keith. So I'm really excited to have you on. Before we get into it, I want to thank our generous sponsor. This episode is sponsored by Porter & Company CPAs. And listen, whether you're leading a deal as a general partner or you're investing in partnerships as a passive investor, you're going to need an accountant who specializes in partnership accounting. And so for that, I recommend my man, Vince Porter. So you can learn more at mytexascpa.com. And so with that, Keith, thank you so much for joining us.
Thanks for having me, Chihiro.
Yeah, amazing. So your group is called Financial Journey. I've had the privilege of getting to know you and your organization over the years, but our listeners don't know what the heck that is. So please, can you educate them what you guys do, what kind of value you bring to people?
Yeah, so it's my privilege to serve a community of self-directed millionaires, people that really want control, who want to do it themselves. And we show a format on how to do that. So the first goal is how to reach work optional. And our typical avatar can do so in 2 to 5 years. And then often we're transitioning to starting your own small virtual family office.
Amazing. And one thing I would add to that is it's not simply financial criteria for your members, right? I've learned through being around you that there's a common thread with everybody in your organization, whether you bring them in to present on a topic or they're a member of your community. And there's this thread of, I would call it integrity, a sense of community, a sense of service to each other. So how did you come across that? Because that's really compelling, and that's one of the things that makes it so cool to be around your group.
Yeah, I think it starts with embodying the values you want, and then I've carefully grown and invited people into the community over the years. So one of the things I like to say is it's a genuine and generous community. People join for the wealth and taxes, and then people often just want to give back to other people like themselves. And so when you get to know other people, the natural outlay of that is helpful. And if you're not like that, if you're just all about the money and you just want the dollars, most of those people don't stick around very long. So we end up with a bunch of families that really want to make a real difference, and both in their family and for others.
Yeah. One thing I will say is in attending your conferences, which is passiveinvestorevent.com, correct?
Mm-hmm.
Yeah. But I've attended a couple of those in the past. And you know what's really cool about that is, yeah, there's people pitching deals and such, but you've also got people talking about charities like foundations, charitable giving. So it really is a different vibe.
Yeah, it really makes a difference. When you put on events, it's easy to get caught up with chasing sponsor dollars or what's going to maximize my results, sponsor results, and I do it a little differently. I start with what's going to maximize investor results, not just today, but in the future. If people are meeting great people like you and some of the other people around, and it's going to incrementally get them closer to their goals, they're going to come back, they're going to stick around, they're going to invite their friends. There's a lot of flashy events and folks out there with big names, and there's often a big upsell. We don't allow any selling from the stage. It's really about delivering results first. And then if you want to do business with somebody, you can choose to do so.
Got it. Yeah, so that's a very refreshing take on the whole conference or investor community thing, which I personally very much appreciate. Now, what was your inspiration for even creating this unique community?
Man, I think some of that goes a little back. I can get into my story if you'd like.
Please.
Yeah. So I originally started my career at Deloitte in San Francisco. Moved to Texas in 2009. My wife grew up in this area. We were only going to be here 5 years, but we've since been here, 15 plus years at this point. And we heard Robert Kiyosaki talking about real estate. So we bought, because we wanted to jump in with both feet, we bought a rental house and a flip house on the same day at age 25. We took our retirement savings, what we could. And from there, we just kept going. So I was growing a CPA firm focused high net worth apartment syndicators. And you mentioned your sponsor earlier. I've since exited, but I realized the value and importance of having a good partnership accountant that really understands that. And so we initially were doing single family residential, and in time transitioned to active and passive investments in apartments and hotels. And then as the CPA, I knew who a lot of the best performing syndicators were because I saw all the numbers. And so I put some money with them, and that worked out really well for us. 2016. Oh man. So I was running a CPA firm, 5 employees. We also had the hotel and some other commercial assets and the rentals. And frankly, we were just going, and we could never really get away from things. We had reached our goal years before. When I started off, we were encouraged, like, set a goal, and that was $10,000 a month in my 20s. And we had gone way far beyond that. And then my wife was sitting there like, why are we continuing to work? Why are we continuing to do it? And part of me, I felt important serving all these clients. Never felt like I could get away. And so we were at this inflection point where I was so caught up with work where even divorce was considered. And I knew at that point that more dollars wasn't going to make me happier. And so along that same time, Hillary Clinton was running for election. I thought the real estate market might crash because real estate only goes in 7-year cycles. I was wrong, but we made a change. And so we had an exit across several businesses, and we took a part of what we earned, and we decided we were going to have fun with it. And so we spent 3 years traveling the world. Got the best souvenir possible out of all that, our firstborn son in 2019. And then coming back, it was really, what do you want to do next? If I wanted to make as much money as possible, I think commercial real estate syndication is a great way to make money reliably over time. And there's nothing wrong with it. I think that's great. For me, my desire and some personal fulfillment was really to have an impact on families and walk alongside of them with my background in managing our own portfolio, our own wealth, and then also the tax side of things was really to grow a community, because as we were traveling, it was lonely. And I was like, there's really not anybody else doing this, or I'm not doing this with anybody else. So let's start there. And it just grew from 2019 on. And those early families we started working with we still are in community today. They're still with us in financial journey. And it's a fantastic way to have fun and have an impact at the same time.
Incredible story. You are still the only person I've ever met, perhaps the only person I will ever meet, who has taken a 3-year vacation.
It was phenomenal, but sitting on a beach sipping pina coladas gets old at some point. At some point, I'm like, you know what? I want to do something more than just watch Netflix. And we had a lot of adventures there too. But you're right. I think there's this drive, especially to do something and make an impact for others.
Yeah. But I think on the outside looking in, I think that 3 years really refreshed you to go at it again, but in a totally different way that wasn't detracting from your relationship with your wife. But you and Jessica I can see you guys are growing through growing FJ. It's a beautiful thing to witness.
Thank you. Thank you for that.
Yeah, very cool. So can you share like a story give me like a prototype example of somebody who really got some great results out of joining FJ?
Yep. There's a mutual contact. I'm not going to say his name, but there was a gentleman that came to me a number of years ago. I want to say 3-4 years. We met at a networking event, and he asked me to take him on a client. And I initially told him no, because I only take on so many folks, and I want to be certain of those I can help with. I eventually reached out to him 9 months later, said we had some availability. He agreed. and we started working together. He started by initially investing in a couple of smaller investments. I introduced him to you along the way, and there's some work that you got to help him with. And in time, we help him package his business up for sale. And that had a rather substantial and successful exit. So often when we're in that, we're looking at the SOPs, the team, the financials, everything that's going to maximize the valuation. We don't broker the deal. We're happy to introduce you to folks, but we're often that independent advisor who's not getting a stake in anything that you're doing, so you can truly trust what we're saying. So there's no conflicts of interest. We had that exit event, and they were looking at what's next. And so we're now in that process, or we've been on that journey with them, helping them establish a family office. What does that look like? And it all started with what were their core values and goals. And often families that are in that role, they're somewhat private about their wealth, and they want to give generously, but they usually don't want to advertise it. And so there's a whole bunch of things that we help people navigate behind the scenes on the wealth and the tax side. And then what people often overlook or don't think about when they're choosing somebody to work with is the relational side. I would say half of what I do, which as a CPA has been a major transition, is the relational side of how do we pass this on to family members? Well, you've got friends and all these people, the moment they realize you have an exit event, reaching out. How do you handle that? And in his case, he's like, he can send them all to me, and I run the due diligence council, investment committee, like we'll source all that. And then he doesn't have to be the bad guy. And he's got somebody independent that's running stuff for him. He still remains in control of everything. I actually don't have the ability to wire money, do anything like that. And it's in a way that he's able to build trust, see the reports, get some guidance. He's in a community of folks that is also doing this. There's some other fantastic families that we work with, and you're building along the way. And to be clear, not everybody's at that level. Our median net worth, excluding our family offices, is about 6 million in the group. And it's really, as one person said, we get to help the poor millionaires. The people, you go to like the financial advisors, they're going to try and step in and do it for you. And for some people, that's the right token, but for the right person. But for if you're an entrepreneur or business owner, you're used to doing it yourself. You want to do it yourself, but there's nobody really showing you how. And that's where we fill a unique niche.
Yeah. Thank you very much for that. I think that really illustrates the value that you add to people through your community. But what that makes me think of is actually our recent guest was his name's Jeff Murphy. He's the executive director of the North Texas Angel Investor Network.
Oh, wow. Yep.
And so much of the value in his group is similar to the value in your group, which is to just because you're very successful at some sort of a business doesn't mean you're necessarily great at investment due diligence or poking holes in an investment thesis. You help people with that because you look at these things collectively or through a group, so that there's all these different perspectives. And that's the value of that angel investor network as well. So to be able to take a pitch and generate 10 or 15 or 20 people's questions to try to poke holes in that, I think is immensely valuable that you do.
So let me ask you, do you know the number one predictor of future bankruptcy?
No.
Winning the lottery.
Wow. Unbelievable.
So what's interesting, and to your point, is often a business owner has an exit, somebody selling a real estate portfolio, and they have this big exit, they make this money, they feel successful, and they're like, I got this, I can do this. And then they do something that's outside their genius zone. And same with a lottery winner. It's a different skill set to manage wealth. And often if our only value is helping you avoid the big mistakes, that's a big win within itself. Because so often people, when they have this big exit, it's like their version of the lottery where they have this exit. And now they're like, what do I do with it? And there's so many people that will just try and sell you things. So we handle things a little bit different. And so if you look at, we look at how do billionaire family offices manage wealth, the people that have been doing it multi-generationally, and we adopt those same strategies. for millionaires. So where Billionaire Family Office is going to have their own independent investment committee that's going to run through things multiple layers deep. In our group, we've got a due diligence council, volunteers of the community. And so if we're going to vet an oil and gas deal, we've got the chief drill officer of a publicly traded company, I'm sure many of your listeners would recognize, who's going to go in there. We can also hire independent oil and gas engineers to get 2 other opinions. So if you've got those kinds of folks saying, hey, we looked at it multiple layers deep into the actual oil wells and things that we're doing, and we think it looks good, you're going to feel more confident. And to be clear, we actually eliminate 80-90% of the deals that get brought to us. We either think they're scammy or they're not going to make much money, and so we just don't share those. And so that alone is a huge value. And then we're also looking at the team, the operations, and that allows us to really go deep with that. So whatever that skill set is, we are bringing those to our community because that helps increase the chances of success. And so bringing it back to the original point you were making, if you want to learn anything new, my favorite combo is get a coach in that area or some sort of independent consultant and a community. That combination with your peers going in there, there's a lot of safety in that, in being able to learn from other people. And there's a lot of roadblocks you can quickly overcome, understanding how other people have handled things in their own families.
Hey, everybody, that was really powerful what Keith just said, right? So get some sort of expert advice, a coach, and get a community. So you've heard Pedro and I pretty much every single episode talking about community. And why it's so important was just perfectly encapsulated there by Keith. So really valuable, wise advice there. Thank you. Now, we have talked a lot about this family office service that you are creating. So I've seen this as kind of the next phase, or maybe an additional area of value that you are creating for people through FJ. So talk to us about, like, what's the ideal person that needs to start thinking about, oh, do I qualify for creating a family office, or how do I even get started? So what are kind of parameters for somebody to start thinking about that? And what are the questions that they should ask of that process?
So to be clear, we're right sizing it for your needs. If you want a full-fledged family office, to be clear, I'm using that term loosely here, but if you want a full family office, you usually need $500 million in assets. And that doesn't apply to most people. Usually $500 million, you're hiring your own attorneys, accountants, etc. If you're in that like $1 to $10 million range, then you're mostly doing it yourself. But there's still some things that we can do from a legal and tax perspective to set you up and make certain deductions allowable that wouldn't otherwise be allowable. And then especially once we get $10-20 million net worth plus, there's more things that we do. And so it all starts with matching the size and sophistication of your legal, tax, and wealth structure to the size and sophistication of your assets and business. And that's part of what we help people walk through. Because even if you've got a $3 million net worth, there's some things in how you some shifts, some mindset shifts, and some structures and strategies that can really start making a difference, especially as you grow into that. The whole point is you want to grow into your wealth over time. So it's not a sudden event like winning the lottery. That's how you learn how to manage well and succeed. When we're structuring a family office, it starts with what's your vision? Who are we trying to serve? So initially, usually wealth and taxes in there somewhere. We want good reporting because as you get bigger, trying to just get accurate data on all the investments you're in gets increasingly difficult. Are you serving your immediate family, your cousins, your uncle, your dad, your parents, your friends? Is it just on the wealth stuff? Does it include travel, insurance, IT? You can quickly see how this grows out of hand. And so we define the scope of services. And if you look at one family office, you've seen one family office. It really depends on what your goal is. Once we know what the vision is, we can start putting a budget to what that costs to build out, and we can reverse engineer the wealth to get you there. So we want to only provide the services that we're confident that you've either got the cash flow investments to do, and based on the size of assets, the people we're serving, we can then start to build out that tax structure. Does everybody get a trust? Are we passing on to the next generation? What are we doing about parents? Is that a factor? You still get to control that process, but now you've got somebody walking you through that. And then we can start looking at investments, time horizons. From our due diligence council I mentioned earlier, there's an investment menu, all that goes on to. So there's always 8 to 15 options that you can prioritize based on whether or not you need cash flow, net worth growth, tax savings. And so it allows us to quickly pull from a menu of selections to formulate that family office based on your needs and desires. And then ultimately, it's like, are you going to manage it? Are we going to help you manage it? We're okay with just about any scenario, but feeling that through really makes a difference.
Got it. Switching gears a little bit here, if we were to take an example of a hypothetical person who's like let's say net worth $1 to $2 million, like they just made AI or accredited investor status, right? One thing that I've always seen as being like kind of a dichotomy really is we all intuitively know as investors we're supposed to diversify, but like wealth generation often is born out of concentration of risk, right? So what would be your advice to somebody like that in terms of reconciling those two things?
That's a fantastic question. Actually, I suggest people in the beginning concentrate to grow wealth. So you concentrate where you know you've got personal skills and experience and can actively grow. Continue to do that. Once you get to when we're looking at diversification, it's usually one of two reasons. One, you're either later in life and you're trying to de-risk from the core activity you had, or you're concentrating. When you're concentrating, you're reinvesting all your time, money, and energy into that one activity. Now, where you have excess capital, your business is growing out so fast or has so much cash flow that you can't effectively reinvest that capital into your own business. That's when we're starting to diversify into other things. Or when usually the key principle, we look at most family offices, they came from somebody who was concentrated in one asset class for 5 to 50 years, really knew that. And then either they're stepping out, they're exiting, we're selling the business. And that's where we really look for diversification. And so some of it, as we're building a family office, it's like, what are your skills and experiences? If you've been in one business, often real estate is an easy one to step into, whether it's owning the real estate your office is in or owning the real estate that real estate is a natural anchor for a lot of folks, and a lot of family offices end up starting their own property management company in time as a stability. And so there's some natural pathways we know, but it really depends on what you and your goals are.
Got it. All right. Really great gems today, man, Keith.
Thanks.
So what do you think is or what is your advice then to help somebody really rationalize some of these things that you've said? Like, for example, internalizing growing wealth versus preserving wealth. Like, these are some challenging thought exercises. These are challenging questions to try and tackle, right? What's your advice to somebody to work through that?
So one, we should always be looking to grow our wealth. With inflation naturally eating away, if you're not growing your wealth, you're losing it. We're preserving it. Whenever I am investing, I've got three things I'm looking at. So first and foremost, I'm looking at the preservation of capital. I'm looking at what are all the ways I can lose money before I get into that investment. Then I'm looking at what's the strongest rate of return. I want something that's going to provide a strong rate of return that's, we can say, risk adjusted or asymmetrical risk. If there's a small chance of me actually reaching that projected return, I'm less excited about it. But if somebody's got a long track record where they've provided 20 to 30% returns for a decade or two, I'm more interested in that. And then lastly, any tax benefits or other ancillary benefits. Sometimes you'll see somebody who leads with, if you invest with us, you'll get a 90% oil and gas deduction. To me, that's an immediate red flag. Anytime somebody leads in their marketing with the tax benefits, rather than how we're going to protect your capital, what our rate of return is, that sort of thing as part of that.
Yeah, I agree with you on that comment, and that reminds me of something, which is on, up till a few years ago, you and my email inboxes both were just flooded with like multifamily deals, right?
Mm-hmm.
And there's bonus depreciation and cost segregation, which for those of you who aren't aware, that's accelerated depreciation. But basically, these are ways to generate paper losses or passive losses. And they weren't, I wouldn't say they're necessarily leading with that, but they're certainly touting that as a major benefit of this type of investment into commercial real estate. But it took me actually becoming a real estate professional and investing as a general partner in multiple deals to realize these tax benefits, first of all, are not applicable to a significant majority of my investors because most of them are not real estate professionals. So what those losses offset, it's not like you can use that to offset your income as a surgeon, right?
Correct.
But that's the finer details that aren't necessarily talked about. It's just, 100% bonus depreciation is back. Is that a good thing? Of course it is. But like, people, I don't think realize how good it actually is, or what the limitations are of that with respect to your own tax status or situation. So
you're absolutely right, and there's nuances there. The IRS has been gutted, so they haven't really been following up. And just because you're a real estate professional doesn't always mean you get those either. So that's like a layer 2 solve. Of people are like, oh, just become a real estate professional. Well, for you to take those losses as a real estate professional, usually you have an active activity and passive activities, and you usually got to group them together. And that's what people say, just group them together. Well, for that to be a valid grouping, the passive activities have to be less than 10% of all your active activities together. So if you're in one real estate deal as a GP and you've got all these other passive stuff, that's not going to work. So one way to maybe view that is look at the revenue, like your portion of the revenue. If this one-off passive deals is just a small part of it, yes, you can put them together. But just because you're active in some single family houses doesn't mean you're going to suddenly qualify over here. So there's a lot of nuance there that most indicators will advertise or market a benefit, but they either know or they're willfully ignorant of the real ramifications. And anybody who's really saying otherwise, the IRS isn't really following up on this stuff right now. And so there's not a lot of accountability for people who are making these elections. So take it for what you will.
Yeah. Just because you're getting away with it doesn't mean it's legal or proper. Yeah. Great insights. Well, Keith, I really want our listeners to understand like how they can get a hold of you, how they can learn more about your community. Can you share that information with us?
Yeah, so we do one big annual event that is like in a day or two, we have a big impact on a lot of folks. So passiveinvestorevent.com, that's October 23rd and 24th. That's open. 23rd, we've got a number of great back-to-back places. It's meant to be a single place where you can get a plan, you're professionals, you got some investments, and we do peer-to-peer masterminds. There's a lot of things that we do there to maximize results. If you're approaching more that family office or a virtual family office stage, we've got a number of great speakers. One of the ones that I can actually announce here today used to manage money for the Rothschilds for 25 years. And so he's coming all the way from Sydney to help talk about how the Rothschilds manage money. And so there's a lot of impact there. And so that'll have more of a family office feel day 2. If you're interested in just learning more and seeing if this is right for me, you can visit my website, financialjourney.life.
All right. So there you have it, everybody. I encourage you to poke around on these websites. There's only so much time in an interview format like this, but there's really a breadth of value that you provide through everything that you do, Keith. So I encourage you guys to check out Keith's websites. Well, thank you so much, and appreciate you spending time with us this morning, Keith.
Thanks so much for having me.
All right. Bye-bye.